In today's video, we're diving into why gold prices are rallying in 2025 and what is driving this global gold rush. For middle-class families, buying gold jewelry has become much harder. But what's really impacting gold prices globally? Let's look at the bigger picture. Countries like China, Russia, Poland, Turkey, and India are rapidly increasing their gold reserves. India's Reserve Bank added $19 billion worth of gold in the last financial year alone, cutting back on U.S. government debt. Over the last 5 years, India's gold reserves have jumped from 661 tons to 879 tons. This has already started affecting the Indian market, where Nifty gave a return of only 2.46% in the last year. Gold delivered almost 63%. Over the last 5 years, Nifty returned 117%, Sensex 118%, but gold outperformed both with 165%. So, what's driving this rally? There are 3 main reasons. First, geopolitical uncertainty. Historically, gold prices spike during wars and crises. From the Iranian Revolution in the 1970s, the Soviet invasion of Afghanistan, to the Israel-Yom Kippur War, gold has always surged. More recently, the Russia-Ukraine conflict caused another jump. Gold has been a universal safe haven throughout history, whether it's the Gulf War, 9/11's, Iraq War, or the 2008 financial crisis. Second, decline in trust in the US dollar. Countries like Russia, China, and India are reducing their US Treasury holdings. After the 2008 financial crisis, the US printed $2.1 trillion under quantitative easing, raising doubts about the dollar's stability. Recent sanctions on Russia reinforce the risk of keeping reserves in dollars. This has led central banks to increase gold in their reserves, preparing for a world less reliant on the dollar. From 2022 to 2024 alone, central banks purchased 3,200 tons of gold, the largest in history. Third, the rise of gold ETFs. Exchange-traded funds allow investors to buy gold digitally without owning physical bullion. However, each ETF is backed by real gold, forcing fund managers to buy physical gold when demand surges. Events like the COVID-19 pandemic and the Ukraine war drove massive ETF purchases, creating supply squeezes and driving prices higher. In India alone, gold ETF investments grew from 5,768 crore in 2019 to 9,136 crore in 2025. Globally, September 2025 saw $26 billion inflows into gold ETFs. Other factors include currency depreciation and festive season purchases in India. The rupee has weakened against the dollar from 61 in 2013 to 88.8 in 2025, making gold more expensive. Additionally, Chinese investors are increasingly buying gold due to stagnant stock market returns and falling real estate prices. So, what should your strategy be if you want to invest in gold? Don't put all your money in one asset. Keep 6 months of income in your bank for emergencies and diversify the rest across stocks, gold, and bonds. Your allocation should depend on your age, risk appetite, and financial goals. Gold isn't just a commodity. It's a geopolitical tool, a hedge against uncertainty, and a historically proven safe haven. That's the story behind the 2025 gold rally. If you found this useful, make sure to hit the like button and subscribe for more business insights, geopolitical case studies, and market updates. Happy investing, and see you in the next video.